now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today we are joined again by Steve Barton of In It to Win It. How you doing today, Steve?
I am just capital, sir. Thank you for having me back on the show.
Yes, indeed. So what areas are you winning right now? We're in it to win it. What areas are you seeing opportunity to win?
Let's see. So we're taking some profits in gold, and gold miners has had a heck of a run, almost a double. And let's see, where I see the most opportunity right now, like this day, is probably uranium. Copper had a nice pullback recently, although we've had a run. So that's probably it. Selling a little bit of gold, buying some uranium.
hmm So when you're saying gold, are you selling like physical or more of the miners, or what are you selling there?
I sold some OUNZ. That's very similar to PHYS, which is basically, I call it air quotes, physical gold on the stock market. It's Van X version of Sprott's physical gold trust. I sold some of that. I moved past the point of concern on Agnico Eagle. You remember about a year ago, Agnico Eagle was trading around 45 bucks a share. It went up to 90, so we got a double. I think it's 1 or 1.5% of my account now, and it has a zero cost basis, so that was pretty cool. What else have I sold? I'd have to run through the charts to maybe come up with a couple others, but yeah, it had some real nice moves in gold. I think we might be coming up on a bit of a resistance point for it right now, although I do see long-term gold is probably going to 10,000 in the next 10 years. I'm a bit of a trader, so I like to take advantages of when I think stuff has gotten a little stretched. I like to take a little profit, and when it gets cheap again, then I like to put some more money in it. So
Yes. Well, shoot. Well, can we look at the gold chart? Can we start there?
okay, I'm going to share my screen here, and then we'll go to the gold chart. So long term, right here, I'll go out to the weekly time frame, and this is just every technical analyst delight right here. I'll draw this. Your viewers are probably familiar with this, but we have basically a cup and handle pattern that started in 2011, and it looks just like it sounds. It looks like a cup with a ladle, right? And you've got this handle that comes out like that, and this pattern is, when it forms like this, almost always works. It's like 9 out of 10 times, if you get a pattern that looks like this, that's not real sharp like a V or like a sawtooth or anything, 9 out of 10 times this is going to break out. And this was no different. It did. What's really cool about this, now a couple of caveats, let me go over here, is basically the way you can measure these upside targets is you take there's two ways to do it. I call it the value way, and that's basically taking the number values, and you take it from the bottom of the cup to the top right side of the cup, and we basically get about $1,000, right? 1,050. The official number is, I did the math just before this, is 1,044. So if you take the bottom of the cup to the top right side of it, right here, and you extend that up, right? So we're going to extend it up a value of 1,044, and I take it from right there and go up, and it comes out right about there. Basically where we're at now. Okay, so we've had about that move. We've had about the value move going up there, and we might have another 50 or 100 bucks in this if we're going to hit the value target on the cup and handle, but we're pretty much there, right? Another way you can measure this is you can do what's called a log target, and what you do with that, I'm going to have to shrink this down a little bit so we can fit it all in the screen. But you take the percentage move. So instead of taking the dollar amount of 1,044, you say that, okay, from there to there is, we'll call it a 100% move. Okay, 1,048, basically 100%. And then the log target of that, the upside target, is you take a 100% move from the top of this handle and then extend it up again. So if we do that and we extend this up again and go up to a 100% move, then we get a target of around 4,200. Now, I haven't done this work, but Jordan Royburn over at the Daily Gold has run log targets on cup and handle patterns, and he says usually what happens is once the value target's been hit, which essentially we have, we're within a few bucks of it, but we're basically there. Once the value target's been hit, it's about 6 to 12 months later we hit the log target. So by that logic, in 6 to 12 months, we could be hitting up in the 4,000. However, as a technician, I can't help but notice that we're getting pretty stretched here on gold. If I bring up some of the technicals here, so what we're looking at, this is price action here. This is RSI. This is MACD. And what we've gotten is, I call it my kindergarten method, but basically when you get an RSI that's above 70, alarm bells should be going off in your head. And you should be saying like, hey, anything above 70 might be time, to think about a sell, right? Anything down here below 30, alarm bells should be going off in your head and you should be saying, hey, might be time to buy, right? Well, when we go out here on some pretty multiple time frames here on the monthly chart, so each one of these bars represents 1 month worth of trading action, we have an RSI of 81. When we go out on the weekly here, we have an RSI of 72. When we go on the daily here, we have an RSI that's just starting to roll over and now it's at 64. But back here it was at 75 and then it came up here and went to 70 and now we're at 64. But we could see that it looks like it's starting to, we've got an RSI here that's just slightly angling down, right? Price action is starting to roll over. There's several, we've almost hit that that target up at the value target of, if you do the math exactly, I got 3,133. We got up to 3,065. Pretty close. This stuff isn't exact, but it gives you a ballpark. You know what I mean? And I think that the gold may be topping out here for a short time frame. Like I said, I still think it's going way higher than it is now, but nothing moves in a straight line. If you have been in gold for a while, you've been in it for a year and you haven't paid yourself anything yet. At some point you got to pay yourself. At some point you got to take a little off the table. I don't think now's a bad time at all. I don't think we have a whole lot more upside, but I think it's, the risk reward ratio isn't right there. If you're new to the channel and you're new to gold and you just realize that, hey, the answer is probably not Tesla and the answer is commodities, and one of those for sure is definitely gold. If that's you, then I think that this is probably your starting point right here. And this is 2,700 to 2,800. There's a decent amount of price action around here. There's a little gap. There's some technical stuff on here that makes me think like, hey, if you're looking to get a starter position, you know what I mean? Like, let's say you want to bet, I have 20% of my portfolios in gold, right? Well, let's say you have 0. Maybe put 1 or 2% position here, of your portfolio once it gets down to the 2,700 level. I think the odds of it getting down here are probably north of 80%, so I think it's pretty likely that we're going to get down into this zone at some point in the next few months. And, that'll be your starting position. Then I got this green one right here. This is where I would actually become interested again and buying more. And that's in the 2,450 to 2,550 range. I don't think it hits down here very often. I think it hits here somewhere between maybe 20, 25% of the time, 1 out of 4, 1 out of 5 times it might get down here. Yep. So I don't think it happens real often, but there is a decent amount of support down here. And, some of the time I think it'll hit. And then the one that would really be, in my mind, a back up the truck moment is this is a triple top right here. So each one of these triple tops, this was 2,089, this was 2,085, I believe, and then this one was like 2,079, or I might be mixing up a couple of them. But anyways, this line right here, I'll draw a little line so everyone can see it. There we go, right there.
The truck.
This is the 2,100, like back up the truck. We had a liquidity crisis, and people are, when someone loses their job during a recession, they have no problem selling GDXJ to pay their mortgage. You know what I'm saying? Like, that's what's going to happen if we reach down here is this would be the back up the truck moment. This would be a washout sale right here. From the levels that we're at now, this is down a third, right?
Yeah.
I don't think it's going to hit here. I think odds of it hitting here are probably 5 to 10%, but they're enough to talk about, so like if it gets down here, unless you hear news that like we balance the budget, like well, then you may not want to buy there. You know what I'm saying? But if we're getting a
Hmm.
liquidity crisis and recession is hitting way harder than anyone thought. So maybe it's a global synchronized recession. I think we do get down here, and I think this is the time that you actually need to buy more.
Yeah,
So,
because usually even in that situation, like it bounces up. So like, could you zoom in on the chart a little bit
mhm.
from 2024? I'm just looking at the even if it were to hit that level, those levels, I'm looking at a couple of resistance zones from there because usually it'll bounce off of that 20, like if it was 2087, it'll bounce off of that and then go up to the next zone. um because oftentimes people sell like their GDXJ and they sell their gold, to get liquid when there's a liquidity crisis, and then people are buying it up, and then it bounces, from there. And so would you say like if you're looking at this chart, would your next, let's say if it bounces off 2087, if we had that liquidity crisis, would you be expecting it to be between the 24 and 2500 kind of zone up there, the green zone?
You're saying like, let's say we do get the liquidity crisis and we get a massive sell-off and it
Yeah,
bounces right here on this white line. Where
yeah,
would I be looking at it to kind of hit some resistance to the upside? Is that your question?
yeah, yeah, exactly, exactly.
Okay,
Yep.
yeah. So basically all I do is you just look back over past price action, and we're kind of fortunate here in that this is the highest it's ever been right here, so we don't have to go
Hmm.
back 50 years, right? Uh, this would be the first one right here. This is around, what is that, 2200, and it's
Yep,
just
22.
basically wherever price action is hit. And then after that, it would be up here at 2300, and then it would be up here at 2450, and you just look back and see like where is there a lot of price action where it's hit before,
Hmm.
and those are kind of the zones that you want to pay attention to. And basically what we can do, let me just move this out of the way, and there. um, another way you could do it is you could look at what are called Fibonacci extensions. And we take this tool right here, and you basically take it from, we can take it from here from the last run up, like the triple bottom down there at 1615, and then run this down to the last, I'm sorry, this one's the last 1615 triple bottom. And this one's kind of hit the same. So we have 100% run up here at 2500, right? And not a coincidence that we have a decent amount of price action around there. And then it came up and came back down and hit right on that level. And then the next extension level up that I think most traders pay attention to would be the 1.618. And we're just about there. So, I mean, when you get like multiple of these that are kind of hitting, any one of these indicators by itself doesn't mean a whole heck of a lot. But when you have like 8 out of 10 of them all kind of telling you the same thing, we're probably getting, to a point that people need to start paying attention to. When you have
Yep.
high RSI, you have high MACD, you've got high price action, all-time highs, right? You have these Fibonacci extensions that are telling you that. You have the value target on the cup and handle hitting right around here. You know what I mean? Like when you get all of these in a row that are all telling you kind of the same picture, you can use that as knowing when you're a little stretched in the price, and you can also use it to know when things have gotten kind of cheap. Like this triple
Hmm.
bottom right here, this 1615 that happened back in October of 2022. I wasn't the only trader that saw that and went like, "Hey, I think we got a real opportunity here." You know what I mean? Like,
Yep.
I don't think it's a coincidence that this came down and hit almost to the dollar 3 times and then had a reversal bar to the upside. All of us called the bottom in gold. That was it. And it wasn't difficult. It's telling you on the charts right there in
Yep.
red and
Those
green.
three candles.
That's it. You know what I mean? Like we all saw it, and it becomes this self-fulfilling prophecy. We're all looking at the same thing. All traders are looking at the 200-day and the 200 weekly moving averages. We're all looking at price action. You know what I mean? We're all looking at RSI. We're all looking at MACD. And the lazy traders have actually programmed computers to do this for them. So
Hmm.
when you have 90% of these trades are done by computers, and the great thing about that is computers aren't that smart. They're simply programmed to do whatever humans tell them to do. And that's what
Yep.
humans are telling them to do is they're telling them to buy on the 200-day moving average, and they're telling them to sell when RSI gets above 70. You know what I mean? And it fulfills this. It's kind of this self-fulfilling prophecy that when everyone's looking at the same thing, that's just what happens.
Yeah, yeah, for sure, for sure. Right now we are getting stretched in price, and and for some folks that are watching, you know, assets don't just go straight up forever. We can expect a pullback. However, we do have these macro dynamics of, I mean, yeah, we got the road to 2 trillion, cutting 2 trillion of fiscal deficits. I don't think we're going to get there. I mean, we're probably going to have to experience a lot of pain to even get there. But we do have the dollar. I'm wondering if the dollar is looking overheated and going to roll over, and then the Fed potentially going to stop quantitative tightening and start easing again. And so we kind of still have some tailwinds in gold's favor, in my opinion. So I'm kind of wondering what are your thoughts there?
With the dollar?
Yeah, with the dollar,
Okay.
yeah, the dollar's been elevated for a while, and at some point, I'm wondering if that's gonna go lower, and then when the Fed starts quantitative easing.
Yeah, I think so. I think when the Fed starts printing, then this is going to get lower. And if past is prologue, they will print. When we get into a pretty gnarly recession, their solution since 2008 has been QE, quantitative easing, and just increase the amount of currency units in circulation. And since there's more of those, it's going to take more of those to buy the same ounce of gold or the same barrel of oil. So right here, immediately for the DXY. I have some support and resistance lines drawn in right here. We're right around one of them right now, which is 104. And it looks to me like the dollar short term is going to get a little bit stronger. Now, this is the DXY in comparison to the euro and the Japanese yen and the Swiss franc and all that. So it's not just blanket across, it's compared against other fiat currencies. So you got to take that caveat. But looking on the charts here, see, we've had a run up all the way to 110, and then it rolled over, blew through the 106.50 level, and there's a lot of price action around that level, so that's where I drew that line. And then there's also a lot of price action around 104, so that's where that white line is. But if you look at the technicals here, see, we've had a nice correction. Look at the RSI. The RSI got all the way down at one point to 25, right? Remember, if it's below 30, alarm bells should be going off in your head. So then we had a little bit of a double bottom right here. And all that is, in technical terms, is the price action goes up, comes back down, hits the same point, and then bounces. And look at what's happened here on the MACD and the RSI, like today, is this yellow line is the 14 moving average on the RSI. We just clicked above that. That's a change in pattern. That means that we've been in a downtrend, and now we've reversed, and I believe we're moving into an uptrend. So I think that the dollar, over the short term, is going to have a little run. It's probably going to get up here to 105. That will be the first level of resistance, and that's not super scientific. It's just the 200-day moving average, which is what all the other traders are looking at, right, that are trading this thing. So that'll be the first level of resistance, and then the next one will be the price action up here, which will be around 106, 106.50, with a downward sloping 50-day moving average. That'll also be a little bit of resistance. But I think immediately in the short term, the dollar's going up. And usually when the DXY moves up, gold goes down, and vice versa.
Yeah.
When the dollar gets weaker, gold goes up. So we've had a nice little run here in gold, and the dollar's been going down, so that's not too surprising. That you can't necessarily follow it on a day-to-day basis, but over weeks of time, that tends to play out. So if I had to guess, banana to my head, I'd say the dollar is moving up over the next little while.
Yeah, yeah. And so, could you overlay that with the S&P? Because we have seen the S&P fall down, and so I'm wondering how, if the dollar goes up, if people are going to be selling off more of these assets, because let's see, we see the S&P is at what, a 40 RSI right now? Somewhere around there.
S&P is at, as far
Oh,
as
that's
RSI, I'm
the
not
overlay.
sure. I could just lay this
That's
over. I could tell you right now, S&P RSI 40, yes. Yeah.
okay,
But
40.
so this price chart right here is the dollar, and then the yellow line is the S&P. Is that what you're looking for?
Yeah, yeah, yeah.
Okay. So do I see any patterns with this? Yeah, it looks like as the dollar gets weaker, the S&P is coming down. Maybe that's just kind of a something to do with, well, not necessarily. I mean, here the S&P is going down and the dollar's going up.
It's
I don't
usually
know.
inverted, right? Because yeah, I see with the because so I'm kind of wondering, like, with both of them falling, if the dollar's going to bounce up, if the S&P is going to uh, fall more, based on, like, if you zoom out on the charts, can we see if, like, there's just more of a
General pattern. So let's see. So the dollar's going up here. S&P kind of followed it, but then rolled over. I don't know. I don't really see a discernible pattern.
okay, yeah,
I've
yeah, I
never
look
looked at
at it,
this chart before. This is interesting. I gotta have to study it a little bit more.
yeah, yeah, yeah,
This is
for
going
sure.
back to the 60s.
Yeah, dang, that's yeah, the dollar was had a lot more value then, huh?
Yeah.
So yeah, yeah, I
Compared
was
to
kind of
other
wondering.
currencies.
Yeah, yeah, for sure. 'Cause I was kind of wondering about that because usually when people flock to the dollar, it's like a run for safety, and they're getting out of, like, kind of the risk assets, and maybe the Nasdaq may be a better one to overlay with that, because Nasdaq is a little more of the risky tech stocks, and S&P does have, like, multiple other companies, like,
Okay, so you're saying overlay, so pull up the dollar and then overlay the NASDAQ on top of that?
yeah, yeah, yeah. I
Okay,
just want to
let's
see
see.
if there's any pattern there.
All right, let's pull it up right now. Hmm. I don't know that I see one. Do you see one jumping out at you?
No, I'm not
Not
seeing
really,
it.
huh?
Yeah, yeah, that's interesting. So
Okay.
yeah, it
And
looks like
remember
the
too, this
Nasdaq.
is the DXY, so this is compared against six other currencies and random
Hmm.
percentages that who knows who decided how many years ago. So
Yeah,
it
yeah, for sure.
it might be
Yeah,
better off compared against gold. I'm not sure.
I mean, 'cause I can see, like, in the recent from 2020, I mean, we could see that the dollar sold off. There's massive money printing. Dollar
Mhm.
sold off. Nasdaq rises.
Yeah.
Then you get to 2022, where there was a lot of structural things happening, and the equity sold off significantly.
Hmm.
I think you had Netflix hitting about $100 around then. Dollar rises sharply, and then you see, like, the dollar kind of selling off, and yeah. So right now it looks like it's kind of yeah. I don't know. It looks kind of interesting with both of them down, and so I'm wondering if the dollar does rise, if the Nasdaq is going to rise or fall or whatnot. So just trying to see, like, some future trends or whatnot. Um,
Yeah.
so yeah, so let's look at uranium.
Okay. I'll pull up uranium here.
Enough
So
with this stuff. People don't care about some people don't care about the S&P. They want to know about the U308.
yeah. Okay, so here's spot price of uranium. As far as any patterns or possible upside targets, support levels, this is on the weekly chart right here. I'm not sure how much we can go by technicals on the spot price because there's so many dynamics that go into the spot price. I'm not sure that the charts are going to be as useful here, but there is some support right here on the 200 weekly moving average right there. When we go on to the daily chart, if we look at price action, there's a little bit of price action back here in April 22. And then if we go back even further, there is some price action around this level right here to catch it. And as far as upside targets, let me squeeze this down a little bit so that I can fit it in the chart. We could do a Fibonacci extension, and we basically take the bottom to the top. And then if this is the bottom, if not, this could just work its way down if this continues to go down. But we could have a target. A 61.8 would take us to 117, and then a 100% retracement would bring us up to 150 bucks a pound. Time frame on that, I have no idea, but those are some potential targets. One thing that I like a lot about this bet, and I have been buying more uranium, is mainly because of this. So if I go to Cameco's website, thank you to the guys at Cameco, they literally list here what the spot price is and what the long-term contract price is. So spot price is 12 months or less if a utility wants to buy or a trader wants to buy some uranium, and the duration of that contract is going to be less than a year, then the spot price right now is $65. If they want to buy some uranium for into the future, 12 months or more, a year or more, then that price right now, the minimum price is $80. Now that term contract could go out longer than a year, and most of them do. But the minimum time is 1 year and it's $80. So as a trader, I can't help but notice there's a $15 arbitrage right here. Carry traders are starting to take advantage of this. And they're basically borrowing at about 3% and selling into the future. So I think this gap is going to close like it has every time before. I mean, if we string this chart out right here, we can see when term contracting started to come into play and be a thing, you know, these gaps will overshoot and then they close. And then they'll get cheap, and then they'll close, and then, you know what I mean? Like, we're waiting on these two lines to meet or even overshoot, like they just did a year ago. That's basic. We're looking for the alligator jaws to close again. Does that make sense? So, as far as fundamentally, that's part of my bet right there. And then I'm playing that. The easiest one, I think, is this one right here, the Sprott Physical Uranium Trust. And what's really cool about this thing is, let me go to the daily here. There we go. So this hasn't been around super long. I mean, it's only been around for, I don't know, 4 years or so. But, you know, back here, you can just buy it, and then you just have 100% run up. Down arrows are sells, right? And then basically all I'm doing is I'm going to the Sprott's website and seeing when this thing is trading at a discount. And that's it. When it's trading at a discount of 12% or more, I buy. And then when it trades at a premium and Sprott starts to issue shares and buy pounds of uranium, then I sell. So you can see right here, buy, premium, sell, right? So you can make a quick, 15, 20% on this thing if you pay attention without a whole lot of effort. And I've just been doing that now for 3-4 years, and it just hasn't stopped working. So I'm surprised that a bank or something hasn't caught on to this and played it, but for whatever reason, it still works. I mean, as much as I talk about it on my show and other people's, it still works, and I'm trying to do it again here. So I started buying right here, buying again. I guess I should have bought down here when it was down to $13.50, but I'm buying. When you line up these arrows and you look at what the discount was at the time, it was at 12% or more. And as soon as this thing gets to a premium, which I think it inevitably will, then I'll sell again and I'll rinse and repeat. And I think it's a really nice vehicle to do that. For our friends across the pond, they can use this one. They can use Yellow Cake, same kind of thing as the Sprott Physical Uranium Trust, but as far as technicals on this, there's kind of this downward channel. I've heard people talk about this being a bull flag. This has got to be one of the longest bull flags in history, if there is one. I don't know about that, but I just know that, like, if you buy this thing consistently when the price is fairly level and it's at a discount, 12% or more, that seems to be just an avenue to print money, and I like it a lot.
Mm-hmm. Can you click on Yellow Cake again? I'm just looking. I was seeing if the charts look kind of similar. Could you overlay that with Spot?
I can do that. Yes, sir. SRUF, Sprott Physical Uranium Trust. There we go. Yeah.
So yeah, it's almost identical in how they trade.
Pretty much, yeah, and it should be. I mean, they're two. They're essentially the same thing. This one, the yellow line is for our European friends, and the other one is for us.
Mm-hmm.
So they're just following the spot price of uranium basically, and so it makes sense that both funds are about the same.
Yeah, that's good. That's good. Okay, well, let's look at some of the uranium companies before we wrap it up with China. I've been in China, so I'd love to look at that. Let's look at some of the ones that have sold off significantly. Let's go Dennison. Let's look at Dennison.
Okay, Dennison, I used to be in this, and then I sold up here, and I just never got back in. It looks like I missed some opportunities for some real money making. Looks like we're in one kind of now. Um, as far as a like picking a bottom, that seems to be my strong suit. If I had to put a limit order in, it would probably be right around here. A lot of these uranium equities are going to look the same, but I think around a buck 40 or so looks like an interesting level. I mean, if you really want to pick up nickels in front of a steamroller, I would look for a double bottom right here. And okay, so we got this level got down to, what is that? $1.27. So I would put a limit order in for like $1.27, $1.28 and hope it does this, right? To come back down and then go up. And if you want to have a lot more certitude, you wait for it to do that. And then you wait for it to get up to like, 134 or something and put in like a reversal bar showing you that the direction has changed. If you really, really believe in this company, then you don't need that confirmation. You just, that Dennison will do well. But, this one's a gamble. I mean, like they're doing something that's never been done before. If they do,
Yeah.
it's going to be amazing. If they don't, then this stock is going to be worthless. But
Sure.
I like looking, like right back here when it hit that low down there. RSI was 28. We had the MACD just starting to turn over. So, hindsight being 2020, I can see straight looking backwards. If I hide the volume here, it makes it a lot more ideal. Like this bar would have been the one to get it at right there, that one on that day. See how you had it showed it, put it in a bottom. But to be much more certain, I like to look for little double bottoms like that. You hit there and then it goes up and hits again and then up.
Yeah, for sure. What's happening with Cameco?
Cameco. This one's exciting. Okay, so I bring this one up every week on my show, and the biggest one in the space. Oops, there we go. Obviously sold this one way too early, way too early, and then it just continued to run. But as far as, an entry level position, just like we drew the green or the yellow box on gold, around 2,800 or so, this is kind of where I see like your starter position in Cameco is around 41.25. Seems to have a fair amount of price action around it. If you want to get really cheap, maybe get it at $40. And then I like a stink bid down here at 36, so that lines up. See, like this double bottom. Here's a perfect example right here. Okay, see how it came down, hit, went up, came down, hit the same spot, right? Get a reversal bar up, and we're off to the races. Like that's what I would like to see in this. I would like to see this go up, come back down, come down around the same spot, reverse up.
Yeah, got it. And then what do you think about it being below the moving averages? Let's see. I see you have the 20, the 50, the 200, and then the green is the 400 or the 20. And so what do you think about so it traded above the moving averages, the 50 and the 200 for a little while, and now it's down below it, both of them. What are your thoughts there?
Okay, so this is semi-bearish, right? We have the 50 moving average, this blue one, crossing down below the 200-day moving average. And that's what we call a death cross, which kind of implies, like it sounds, that the price action is probably going down, right? And that makes sense. I mean, if you add up the last 50 days and they're less than the last 200, then the trend is moving down. I mean, you've got a lot of these shorter term moving averages moving down, the 20 and the 10. The only one that's moving up on this chart is the 400, and that is just starting to level out here, right? So yeah, in that sense, that's where you, at least for me, I got to take like the whole thing into the picture. You know what I mean? I'm looking at volume here. I'm looking at RSI. I'm looking at MACD. I'm looking at the moving averages like you just talked about. But what we also have here is we have a trend reversal. And we have a trend reversal here by looking at the RSI moving up above that 14 moving average on this RSI. We have a positive histogram right here in the MACD.
Yeah, MACD.
Right? And look at this. So this white line here, this is why I like this white line. This is the 10 moving average. Kind of shows you a little quicker, right? And so now we've got the 10 that is just crossing above the 20 moving average, showing that the trend is starting to reverse. And I think it's likely it will. I would prefer to wait for it to come down here. We had a bit of a double bottom right there. So if you were Johnny on the spot, you would have bought on March 10th. But, this is where we are now. We could see straight looking backwards. And I would prefer to see it come back down in here and kind of get into that buy zone a little bit. And it may not, sometimes the thing just runs away on you. But the way I look at it is like, I don't have to make money in gold. I don't have to make money in uranium. I don't have to make money. There's always something that's cheap, and I don't care if I make money from copper or gold or fill in the blank or some tech stock. I just want to make money. That's what pays the mortgage. That's what puts food on the table for the family. And I really don't care what that asset is. I just like to buy stuff that's cheap and sell stuff that's expensive. And right now, I think that uranium is relatively cheap.
Yeah, I mean, especially like when you look at it's almost like valuations when you look at like uh the margins, and so it's if you're buying down there, like okay, what is the risk that it's going to go lower? Usually when things get that depressed, they do bounce off of that. So if you're able to even look at the RSI and let's say if it were really depressed and then it hits that $36 target, you'll know like okay, it's oversold, like it's most likely going to bounce, and then you can make some profits, some short-term profits. And so that's something that I've learned over the last couple of years.
Yeah, if I can do a little segue here. So I got the mag stocks right here. So the mag 7 and then also Palantir just kind of thrown in for funnies. And if we go here to the financials and look at the earnings per share, so basically price to earnings ratio 455, right?
Wow.
Insane. Like I don't even know if I've heard of that before until now, right? So basically the way we can look at this is for every $89, one share of Palantir, $89, at the end of the year, they're going to show an earnings of that $89 that you gave them of 21 cents. So the way I look at this is just kind of a quick, easy valuation method is, okay, I give this company $89, we'll round up to 90, and at the end of the year, I get 21 cents. That doesn't seem like a very good deal, I mean, if you take 89 bucks and divide 21 cents into that, it'll come out to 455. Now, compare and contrast that with down here at Devon Energy. Okay, I give them $36, one share, and at the end of the year, I get $4.58. Price to earnings ratio is 7.9, right? That seems like a much better deal to me than Palantir. And if we run through the Mag 7, you can just see some crazy valuations that just don't make any logical sense. I think there's a reason that Tesla has sold off 50%, because it should,
Yeah.
and it should
Yeah,
sell
yeah.
down more. I think it's got even further to go. I think there was just some premium put into this because Elon attached himself to Trump during the election, and then people have finally realized that, well, that doesn't mean that he's going to sell more cars.
hmm Yep,
But
yep, for sure.
yeah, anyhow, so yeah,
Yeah, that's
I
that's
look at
a
Palantir as expensive, and I look at Devon as cheap.
Yeah, exactly, exactly. So let's wrap up looking at China real quick. China had a pretty decent run recently. I know that Michael Berry, he's been buying China for a while, especially specifically Alibaba. But this is the Chinese ETF, and I mean it in 2021 it sold off. China went through a lot of economic issues, and then last year in the fall, they started announcing they're going to do some massive stimulus, and
Yep.
so then just looking at the charts of some of these equities, they started running and stuff, and so like and lately they've been performing pretty well. Even I've noticed with them in my portfolio on days where U.S. stocks are being depressed, like the Chinese equities would run. And so just wanted to see what you're seeing on the technicals here.
I'm really glad you brought this up because I've been thinking about China for a long time, but I haven't looked into it. And then I just heard on John Polomy's show that they're going to start encouraging. So they were so into real estate, right? That was like their main form of investing was real estate, and I mean it got into such a bubble. They were building apartment complexes with no one to live in them. I mean they had more housing units than they had people. Like that's how far out of whack it got. Now they're going to allow a lot of Chinese citizens to kind of dollar cost average, and instead of putting it into real estate that nobody's going to live in, they're going to put it into their stock market. So I could definitely see a case for investing in China here. Maybe once bitten, twice shy. I was in China Mobile, and that got held up in shareholder purgatory for a few years and then was sold for me a couple of years later. So I might be a little bit apprehensive about doing it, but man, yeah, this is tough to ignore. So I don't necessarily see a buy today. What I usually like to do when I start out with a brand new chart that I haven't looked at before is I'll start out here on the quarterly. So every bar here represents 3 months worth of price action, right? And we can see this chart goes back to 2011. And I'm just kind of getting a general look at the chart, okay? So I see like general increasing volume over time here over the last, 14, 15 years. I'm looking, I call it my kindergarten method of, buy on this end of the chart down here and sell on this end of the chart up here, okay? Well, we're towards the bottom half of this, right? And then we go to the monthly, same kind of thing, okay? This would have been a moment if you could catch it. Then we go to the weekly here. Okay, now I'm starting to pay attention to the moving averages, right? I see the 200 weekly moving averages going down. I see that the 50 weekly moving average is going up. Each one of these moving averages I like to think of as like a soap bubble that the price action can kind of find support or resistance against, right? I don't think it's a coincidence that the stock price got up here to the 400 weekly moving average and then came down and then came up and did it again, right? There's other traders that are looking at the same lines I am, right? Then we go here to the daily, and this is where the sweet spot is. I would be looking to enter this on a pullback. It looks to me like it's going to get a little bit cheaper, and I would be looking to enter somewhere around the 200-day moving average, which would put you right now at this moment at $47. But there's a decent amount of price action around there, right? If we line that up, we have some there, we have some there, we have a lot of price action, hit it there, hit it there. Here, I'll just put a line in here so it's a little more obvious. And yeah, that looks like a decent level. Yeah, would that line up with anything else? That would line up with the 50 weekly. Ballpark, without studying this much more, that's kind of what I'd be looking for. I don't see any other real patterns. Some people might say that this is a cup and handle. I don't think so. This is a little bit too much of a V for me for this to be a cup and handle. But I definitely see a double top right there and right there. So it came up. I don't think it's a coincidence that it hit almost at the same price point and then came back down. I'd be looking for that. Maybe starter position right down here on the 50 daily, and then a little bit more down here on the 200-day moving average.
Mm-hmm. Yeah. Could you look at Alibaba real quick?
Alibaba?
So this is one that Michael Burry has been buying for a while.
Oh, no,
But
this is interesting.
yeah, this one took off. I was seeing it at 76.80. But I got into a couple other names like Baidu and JD. But yeah, this one started running significantly. I think a lot of it had to do with their earnings and such. And so
Okay. Yeah. Okay. So yeah, Michael Burry probably bought down here. Good for him. Monthly. Okay. Weekly. Yeah. I mean, there is like kind of a, I don't really like them that much, but they're basically like arc patterns, it kind of the beginning stages of a cup that people draw. The part I don't really like about those is like, let's say the price action comes back down here and does that. Well, then you just redraw it. And then it comes back down and does that. And well, then you just redraw it, and it's always an arc. You know what I mean? So I don't really particularly draw those too much or pay too much attention to them. But if there's any levels that I would be paying attention to, so that's 103.91. It's probably about the same. 93. Yeah. I mean, I suppose this could be a bit of a cup. It's not perfect, but if it is a cup pattern, this is very, very bullish. And so we look at this right here, and then it runs up, and then now we would be forming the handle right here. And what's interesting about this is if you can picture the gold chart, the right side of the cup on the 13-year cup and handle pattern on the gold chart, the right side is a little bit higher than the left side. And that means it's actually more bullish. So it's a continuation pattern. So we need the price action to be generally moving up. Then the cup starts to form, and then the handle starts to form. So some caveats here. If that's what's forming out right now, what we do not want to see is we do not want to see this retrace more than 38.2%, which right here would be 122, and it cannot retrace more than 50%. So it cannot get below 114 or this pattern's negated. But I mean, this is kind of interesting. We definitely have enough time here. You want 7 weeks for it to go. And this is, since October of 2024. So that's definitely long enough. Yeah, I don't know. I mean, I would let this iron out a little bit. See, we still got high RSI. We've got RSI of 53. We want to see this get down into the 30s. But if this handle forms out like that might qualify. So, yeah.
Got it.
Yeah.
Well, yeah, Steve, appreciate you for running through some of these charts with us. Where can people find more about some of your analyst work? I mean, you're on your channel and everything. I'll be sure to link to it in the description and into the title of this video. But what else are you up to? What else can people expect when they come and interact with you?
Okay, yeah, come over to stevebartonmoney.com. That's the website, or In It to Win It on the YouTube channel. I interview experts in the commodity space, pick their brain, and basically that's helped me identify which companies I should be focusing on. And then I pull them up on the charts and try to find nice price points to buy these things at, right? So I interview experts in the field, and then every Sunday I do a show called Monday Market Moves where I pull up all these companies on charts, and I show you exactly where I'm buying and where I'm selling and at what price points I'm doing that. And I love doing it. It's a lot of fun to me. If you could do me a favor and just put links to both of those down in the show notes. I'd love to have you guys. We're in it to win it.
Yeah, will do. Appreciate you, Steve, and we'll be in touch. Everything. Thank you.
Thank you.